Good day, guys. This is Anonymous Trader, also known as Unknown Trader 10. I'd like to give a shout out to Beastleg72. Beastleg72 Java from featuring me on this YouTube video. So, what I'm gonna do today, I'm just gonna show you a little bit of my strategy. Or if you don't know me, you can go to Unknown Trader 10 on Instagram. I think that's where you'll find me and to see what I deal on or deal off. Yeah. So I'm just gonna show you a bit of my strategy and analyze for you on what I see. So I trade indices. I trade all indices, you see, but mainly I focus on two, which is German and USDH. German and USDH. So I'm just gonna show you what my strategy is about. Then yeah, analyze for you. So what I do, I use SMC. I use smart money concept. So I focus on high time frame buyers, and on the high time frame, I just check whether the market is on a premium or discount. I just use premium and discount on the higher time frame. Then use a market structure, because structure is very fundamental. It's very important for you to get the direction and have entries, you see. So I use premium and discount. Then I use market structure. Then yeah, I use other blocks. I mainly focus on other blocks as my point of interest. I use other blocks, invest fair value gaps, and breaker blocks. Then liquidity. Yeah, yeah, and that's all. That's all. And I focus mostly on sniper entries, because indices you must have sniper entries. Then I also trade based on time. You see, so that's the reason I'm trading. Yeah, USDT and German date. In the morning London session, I focus on German. Then during the New York session, I focus on USDT. So I'm just gonna show you a little bit. I don't think I'm gonna take long, because I don't want to make this video long. So mostly on the higher time frame, I just identify high time frame structure. So let's say we have this. This is a break of structure. So if the market breaks a high and closes above that high becomes a what? A weak high. A weak high. I mean, yeah, a weak high. I think I made a mistake. Yeah, a weak high. Then the low becomes what? A strong low. It becomes a strong low because you know that right now the market it is in an uptrend. Strong low, strong low, strong low, strong low. Yeah, strong low. We know that the market it is in an uptrend. So we know that if the market it is on an uptrend, it creates what? Higher highs and higher lows. So what we're expecting, we're expecting for the market to come, give us a higher low, then continue to break that high, give us a higher high. Then you see just like that, just like that, just like that. So that is the expectations. You see, so it means if we identify our structure and we see something like this, we know that okay, we are focusing the overall direction is bias, but we are on the higher time frame. Maybe let's say we are on the daily. I'm mostly a scalper, you see, so I'm a day trader, you see, so I cannot wait for 10 days or 15 days or 5 days for me to get my setup. So I have to trade on a day-to-day basis. So what I do is that I take my gun box from the top to the lowest point. So we all know what a discount and premium is. I hope you do. I hope you do, because I don't want to make the video too long. So this place here, it is my premium. You see, it is my premium, and this place here, it is my discount. So we know that we are supposed to sell at a premium and buy on the discount. It's the same concept of saying we sell high, we buy low. You see, and we know that even the people who use pure price action, we know that the market moves with and what in pure price they see the market moves with an impulse and correction. So if this is our impulse here, if this is our impulse, it means this is our correction. Then this is our impulse. So what do we expect after impulse? We expect a correction. Then after that, to have an impulse. So So it's the same concept. So we're expecting for the market to do what? To give us a pullback or a correction to come to the discount. So if you're on the daily, we know that, okay, since the market is on a premium, now what I'm expecting price to come to the downside. Price to come to the downside. Only when it reaches the discount, that's when I'll be looking to get my buys, you see. So that's what I identify. Then after identifying whether the market is on a premium or discount, I move to 15 minutes time frame. Okay, what do I look for on the 15 minutes time frame? I look for structure, you see. So if on the 15 minutes time frame, let's say I'm trading London session, I'm trading German date. If I go to 15 minutes time frame, then I see something like this, which is a 15 minutes break of structure. I know that what I'll be looking for continuation of sales. I'll be looking for sales. Why? Because I know that the market has to come to what? The market has to come to a discount. So I'll be looking for sales. So I do the same thing on the 15 minutes time frame. As you can see, the market broke this low, making this low what? A weak low, because the market broke it and closed below it. So this low here becomes a weak low. Then that high becomes a strong high. So then I take my gun box, drag it from the low to the high. So it gives me what? It shows me whether the market is on a premium or on a discount. Then once the market gets on the premium, because that's where I'm supposed to sell. Remember, we sell at the premium, then we buy at the discount. Then I'll wait for my liquidity to be swept. Then after that, I'll identify a 5-minute order block. I get my entries on the 5-minute order block. Then from there, I'm just gonna take that selling opportunity to come with it to the downside. You see, so that's just simply how I trade, or how my strategy is. So I'm just gonna delete everything, then go to the chart. So I'm just gonna give you one example, one example of the trade that I took today. We can even do this over here. Then after that, I'll show you what we can potentially expect from USDT. So what I identified is that, okay, I came here, identified a break of structure here, which is here. As you can see, the market gave us this high, came below, then gave us a break of structure. So it means we're expecting what? When the market is here, we're expecting a what? A correction or a pullback, you see. So it means this is our break of structure here. This is our break of structure. This is our break of structure. Then we're gonna take our gun box from that high to this low. So I think by just seeing this, you already know what we're expecting, you see. So we're expecting what? We're expecting sales as a form of correction until it gets here. Then after that, we're gonna continue to go to the top side, you see. So as of now, we were looking for sales for the day. We were looking at sales for the day. So after that, remember, I go to 15 minutes time frame. On the 15 minutes time frame, what do I identify? I identify structure. So remember, I said I trade based on time. So from 11, that's when from 12 and 12, that's when I checked US date, because in the morning I checked German date. So here I'm just going to show you US date only. So what I identified was this break of structure here. I saw that, okay, here we have a break of structure here, you see. So then I take my gun box from the low to the high. Then it showed me that, okay, right now the market, it is inside what? The market, it is on a premium, and on a premium we sell. And remember, even on the higher time frame, we are on the premium. So the buyers on the higher time frame, it is sells. So if you're on the premium, then I go to 5 minute. I check for my what? My other block, and my other block and my liquidity. So for liquidity to be swept, the market must not close above a candle to show that it's liquidity. The market must not close above a candle. You see here, this is what we call liquidity. Why? Because the market did not close above this high. You see, but once the market closes above a candle, that's not liquidity. That's not a liquidity. That is a break of structure. You see here, the market closed above this. This candle still closed above this high here. So this is not a liquidity sweep. You see. So okay, this is my 5 minute candlestick. What you can do, you can also use the gun box on your other block. If the other block is too low, you can use your gun box on that other block to make it more smaller. You see. So if you use it like this, then you can use your entries can be from here. Okay, but I didn't enter this trade here. Why didn't I enter this trade? Because of I knew that it lacked liquidity. It lacked liquidity. There was no liquidity here. And before the market went up, remember structure. Structure is very, very important. Very, very important. Before the market went up to that place, it showed us signs of a potential reversal, potential change of character. Because if you can see here, it gave us a low, it went up to give us a high, then it came out, took out the low. So which is what it took out this liquidity. Then it went up to break that high. So it gave us a slight market structure shift. So I know that even if the market comes down, the potential of it going back to the top side, it is still there. You see why? Because it gave us this market structure shift. You see, so even if I say that even if I entered here without checking the liquidity, I will have known that I'm not gonna hold this until TP. I'm gonna hold this somewhere around here because this is a form of change of character. You see, but you have to follow the rules. So my rules, they say that I trade 15-minute structure. The market must be on a premium or discount. Then the liquidity must be present. You see, so I didn't take the sell. Instead, I took this buy until this place here. But I just want to show you how I took the sales, because I took the buys and the sells. So, and you can check my Insta. I don't know when this will be posted, but on my Instagram, I posted the trade and the setup. So I waited for the market. The market dropped, then that's when I waited. And when it got here, I bought. Okay, but I'm not gonna check this. Talk about this buy. I'm gonna talk about this sell. So once it bought, it went back. I went back to 3 minute time frame to identify an order block, which can make the market come down. Okay, the order block was still here. You see, we still have the order block here. We still have this other block here. You see, but I knew that the market was going to take out this high here. So if it takes it out as liquidity, there has to be an area or a point of interest that the market is going to reverse on. So I went to 1 minute to check for what, for an unmitigated order block, because I wanted something which will convince me that, okay, since the market did not since the market tested other block and reversed without taking out liquidity, there has to be another other block that the market is gonna touch, which is not mitigated. And in this case, was this extreme 1 minute other block. You see, extreme 1 minute other block. Then that's where I took my cells from there to the bottom. Remember, I emphasized about sniper entries. You see, because these are indices. Indices must have snapper entries. I could have held this for a while, because remember on the daily, we know where the market has to reverse. Remember, we know where the market has to reverse on the day. You see, but as I said, I'm a scalper. I'm a scalper. So I think I held it around here because I closed during this half past movement. You see, so here I was just simply showing you how the strategy works. It is simple, né? So right now I'm just gonna analyze for my expectations on USDT. So USDT has been bullish, even if we had this movement due to the Trump threatening China with the tariffs. The market, it is still respecting the buys, because if you can see, the market came to what, to respect the discount. The market came to respect the discount of this break-off structure here. Because if you can see, the market never came to give us a clear pullback on this break-off structure. This is the candlesticks which gave us this break-off structure, but then the market never came back. The market never came back to give us a clear correction for this break-off structure. You see, so here the market was coming back to give us a correction for this break-off structure, meaning that the market, it is still overall bullish. You see, the market, it is still overall bullish. Okay, so by focusing on the current market, we know that, okay, here we have a what? We have a break-off structure here. Sorry about that. Here we have a break-off structure. I'm trying to make it as short as I can possibly do. I'm just gonna do a USDT only, because I don't think I'll have enough time. Okay, here we're having a break-off structure. So if you're having this break-off structure, I expect the market to do what? I expect the market to correct back into what? Into discount. Then from discount, then it will continue to create what? New highs. New highs. Okay, so let me check that back. So as you can see, currently the market is not on the discount yet. So I'm still expecting the market to do what? The market to sell. I'm expecting the market to sell. Okay, which place can the market sell to? But as of tomorrow, yeah, as long as the market is not below discount, look for sales. Look for sales. Because even the buys can be there. Yeah, the buys can be there, but the buys will be short, and the sales will be strong. You see, the sales will be strong. So the sales will be strong. Yeah, the sales will be strong. So I'm still expecting this continuation of the sales until they come back into discount. So if you can see here, we have a break-off structure here. Even if the market comes here, and tries to buy, like, don't fall into it and say you're buying and you're holding long term, because the market is going to eventually come down. You see, so I expect the market to reverse somewhere inside here, so we can reverse on this unmitigated order block here. You see, so if the market comes back to this place here, this low here will be the liquidity. That's where you can expect what the buys to hold the long term. You see, but as of now, we must focus only on the sales, nothing more. on the sells until the market comes below discount. Focus on the sells only, 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 only. So that's my view on USDT. That's my view on USDT. So currently we just have to expect sells, 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 sells. So since there's no price here, and I told you that I trade based on time, I trade from 8 o'clock in the morning, I trade German data. Then from 12:30, I check USDT. You see sometimes German data also. So right now, since it is midnight and there's no structure that I can show you here, which now you can buy now or sell now. I don't think there's any trade I can give out as of now. But if the market does a pullback from here, and tomorrow you find it somewhere above uh, above discount, which is going to be the premium, just know that you must expect sales. You must expect sales. You see, sales. You must expect sales only. You see, so as of now, there's nothing. What I can tell you is just that look for sales on USDT. So yeah, I'm just gonna go to German. I'm just gonna go to German.
Good day, guys. It's your one and only BSLEC72. As you all know me, your mentor. Please make sure you hit that subscribe button and the notification bell for you to be notified whenever I'll be dropping the next video.
BSLEC72 is back. Okay, right. Okay, let's see, guys. Now we are on German 30. Oh, let's clap hands for the first trader who was on this video. He calls himself Anonymous Trader. You understand? Yeah. Guys, there's still more to come. Please hit the subscribe button and be notified. Share this video, guys. Share this video. You understand? So we can actually see on this weekly time frame we've been bullish. You understand? So I can't say we need to mark turning points. No, because that's not where we are going to. Let's focus on the current market. You understand? You don't want to trade the past. You want to trade the current. You understand? So what will happen is simply you will have to mark your low. I've been preaching this for over 1 year now. And then you have to mark your high. You understand? It's simply just a swing high and a swing low. You understand? This is my swing low. That is my swing high. And then what will I do? It's simply mark that with a red horizontal line. And then mark that high again with a horizontal line. And then I want to trade on a discount. Why? Because I don't want to find myself being caught in a premium zone whereby price it's too expensive. You understand? I want to find myself on a discount. So I'll simply use this tool and I can see that I have an equilibrium, which is my midpoint or my 50%. You understand? And then I will actually see that, okay, below this blue line, this is my equilibrium zone, meaning the market did come to my discount zone. And then what happened? The market simply went to the top. You understand? Because the market was not supposed to even come to this low, because remember, guys, if we are bullish, we are respecting lows and we are breaking highs. So what we are looking for here, it's simply to see if the golden zone was respected. Okay, fine. From that low to that high, the golden zone was respected and the market did push to the top side. That is enough for me to know that, okay, fine, I am actually looking for my what? For my buying opportunities. In whatever I do on German 30, I just need to look for my buying opportunities. This is the EQUIZONE strategy funded by BSLEC72. Okay, fine. And then what am I doing next? I am looking for my previous week candles. On those previous week candles, I need to find the equilibrium zones. Let's start with this black. This red is my current week, so I don't focus on that one. I focus on my previous week. You understand? So I'll just mark the high there of that candle and that low of that candle, and then I can see that what am I looking at here is a simple equilibrium zone. Then I delete. Sorry, let me just do this, and then I move on to the next candle. Right? What do? I mark that zone there. Can you actually see how the market respects this equilibrium zones? If you want to see from the beginning, go to my past videos. Before you start to judge, go to my past videos and tell me, guys, this strategy is accommodated to everyone, whether beginner, intermediate, advanced. Guys, if you are looking for a strategy, this is a simple strategy, guys. Just need to know certain things only. Once you know these certain things and you master them, it's chai. It's chai. Can you actually see how the market respects these equilibrium zones? Guys, let's check. The market respects these equilibrium zones. The market does respect them. That is why I am saying, if you don't want, okay, wait, I think I've made an error. Okay, fine, because the laptop is far there, so don't be surprised if I come closer. You understand? Okay, fine. So we can actually see that the market has been respecting these equilibrium zones. What am I doing next? I have to go to my daily time frame to confirm market structure. You understand? I have to go to my daily to confirm market structure. So let me just delete these arrows, right? Let me just delete these arrows. Let me delete these arrows, and then let me just use my rectangle. Guys, I'm in a good mood. So if you don't want to subscribe while Bislek is on a good mood or in a good mood, then I don't know. Guys, subscribe. So let's just fix some things here. Just want to fix some things. That's it. Okay, fine. So I am marking that zone because I am above that zone. You understand? So I need to know what's happening on that zone in order for me to know if I'm going up. You understand? So I'll just go to my daily. Oh. Yo, you see what I see, Mar? Okay, so we know that the market did respect our golden zone on this low here. So we know we are not supposed to come to that zone or low. It's not a zone, it's a low. We are not supposed to come to that low, because if we come to that low, that means the market structure is changed. We are now bearish. We are looking for sales. But as long we are still bullish, we will break that high. Which high am I talking about? I'm talking about this high there. Understand? Fine. Let's delete this arrow. Let's move to the current market. So what we are currently looking at here, we can actually see the market did come there. Because if we can do this, guys, if we can do this, check. If we can do this, just look at the screen. Look at the screen. If we can do this, let me just delete this thing. If we can do this, we can actually see this zone was our equilibrium zone. You understand? Then here we are on a discount, meaning we were supposed to look for a buy somewhere there to go to the top side. You understand? It's fine. It's not a train smash at the end of the day. That's why I'm here. We have to find for those entries, right? So I'll just use that same low which we retested on the weekly time frame to that current high there. And we can actually see we didn't come to our golden zone. Understand? So one thing I'll do is simply break down the market till the end. Still, I move to my weekly, to my 4 hour. What am I looking for on my 4 hour? I will simply mark my low there, and I will simply mark my high there. What I'm waiting for is the market simply dropping down here, then moving to the top. I won't do anything else besides seeing this price moving to my entry. From my entry, I will look for my entry types. I don't just allow the market to come straight to my golden zone and take my buys. I don't do that. I wait for the market to come to my golden zone. Then I go to the smallest time frame, find my entry types. You understand? There's a tutorial video that's still coming that will talk about those things. You understand? I don't think there's anything else that I need to do here. There is nothing else that I need to do. So I'll just wait for the market to actually come to this entry point, and then once it gets to this entry point, then I will start looking for my entry types. I only have 3 entry types. As I said, there will be a tutorial video that will come, that will be dropped, that will be uploaded, that will talk about those 3 entry types. So next time you don't get confused. But meanwhile, as a trader, I'm sure you do have those entry types. If you don't have, then It's either you go find them, or it's either you will just wait for me to drop the video that will talk about those three types. Guys, it's Beastleg 72 at the end of the day. No one else there is like me. You understand? No one else is like me. There's only one Beastleg, guys, in the country. You understand? So let's go to the 1 hour. Let's see something. Let's go to the 1 hour. Nah, ugly price action. Let's move to the 4 hour. This is what I can wait for, guys. I will need the market to come drop there. If it doesn't drop there, and what happens is the market breaks this high, it's also a good thing, meaning now I will use this low to the next high, and then obviously maybe let's do this. Let's say now I am having something like this. The market breaks this previous high, creates a new high, then the market drops, for example, like this. One thing I will simply use still the golden zone from the same low here to that high there, and then I'll just wait for the market to drop here. The trend is your friend. The trend is your friend. You just need to follow the trend. Don't go against the trend. So if the market breaks that high, I'll just wait for the new high, and then I'll use this low here, and then the new high, and then I'll just wait for the market to do something like this. Meanwhile, since we didn't break this high here, I'll still wait or expect the market to come down there. Once it comes down there, then I'll start looking for my buys. It's your boy, Beastleg 72. As you all know me, guys, I'm in a good mood. So if you don't want to subscribe, I don't know, but then just subscribe. Hit that subscribe button and just be notified whenever I'll be dropping the next video. Part two. We are not done. We are still coming. If you haven't felt that thunderstorm is still coming. Thank you. God bless you. I love you.